Ever wonder why price reverses exactly after touching a certain candle? That's no accident, it's a mitigation candle, and I will show you how to spot them and trade them profitably. So stay tuned till the end of this video. So, mitigated and unmitigated candles. When we say a candle is mitigated, it means that candle itself is not fresh. That is, price has returned back into that candle, has probably tested it multiple times, right? And when we say a candle is unmitigated, it means that particular candle is fresh. Price has not used that candle at all, so the candle is fresh. And we often believe when big institutions enter a trade, they often leave behind an unbalanced price area, which later price may return to fill in or to mitigate that imbalance before continuing in the original direction. This is what I'm trying to say. Let's assume price keeps making higher highs, higher lows, higher highs, higher lows, then higher highs. Then later on, price started making lower highs and lower lows like this. We often believe this supply area up here, that is an unmitigated area, right? And we expect price to do what? We expect price to probably come here, continue, take out this I in form of a liquidity, right? We expect price to often take this I as a form of liquidity. Mind you, I am not talking about liquidity in this video. I am just using this as an example, right? So we expect price to do this, come down, do this, and then come down. This area right here, we believe price has mitigated it from there. But then before price got to that side, before price got there, when price was here, price has not mitigated that zone at all. This particular area, price has not mitigated it. I'm trying to, excuse me, yeah. This area right here, price has not mitigated it. But then the moment price tapped into it, it is believed to have been mitigated, right? Immediately price tapped there, it is believed to have been mitigated, and then price will continue in its original direction. That is what we all believe mitigation and unmitigated candles should be. And reverse is the case when the candle is bearish. Let me try to inverse the charts so you can easily see. Excuse me. Yeah, this is for the bullish scenario of a mitigated and unmitigated candle. I'm very sure we understand because it's quite easy and straightforward. Yeah. So let's go straight into the main reason of this video. Have you ever been in a situation where price is obviously in a bearish market and price keeps making lower highs and lower lows, lower highs and lower lows, something like this, and then price does that, and you'll be expecting this particular supply to hold, and in this case you will set your sell limit right here, expecting price to come here and then take your profit, right? But then to your surprise, price is going to break that's your supposed supply, come to the higher level, mitigate this particular supply, neglecting the one you initially had in mind, and then sell. So price will take you out, and you'll be wondering, why exactly did price take me out? Where exactly did price take me out? I am going to explain all of that in this particular video. So make sure you stay tuned till the very end of the video so you would not miss any part of this video. So in this particular scenario, we can see that we have 4 cases in which we can easily tell if price has mitigated the particular candle or not. Please note that if price has mitigated a particular candle, the probability of price respecting that particular candle is already low. But then if the candle is fresh, it is unmitigated, the probability of such candle working of or the probability of price respecting such candle is high. So for this first case now, let's assume this is the supply. And if you are here to watch the supply and demand video on my Telegram, on my what's it called, on my YouTube channel, please. The link is going to be in the description and is also going to be on the top right of this video. So do well to watch the video. So back to the first case. We'll be expecting price. Let's assume this is let's assume this is a supply candle, a supply area. Are we expecting price to do what? To come to this zone and, sell off, right? That's what you'll be expecting. But guess what? Like price is most likely going to do. Price might come down here, do something like this. When price gets here, we'll be expecting it to sell up, but then price might give us a small reaction, and then boom, price is going to violate it. Why do you think price is going to violate it in that case? If you look very well at that candle, if you look very well at this particular candle, you see that this bearish candle has a wick. Let me delete this. Oh, let me delete this. Yeah. This particular bearish candle has a wick here. And the next candle already traded back into this first candle, right? Making it mitigated already. Let me try to point it out. Look at this particular candle here and this candle. Price, the second candle already mitigated the first candle, making it invalid. So in that type of case, if you're expecting price to reverse from there, it would not. The probability of it working is low because price already mitigated the previous candle. And the same case for the what's it called, for the bullish scenario. If you're expecting price to come to this side and do what and buy, you know what price is going to do already. Price is going to go up. Okay, fine. Make you feel as if okay, it wants to start respecting it, give you small intent, and then boom, take you out. That is exactly what is going to happen. Now let us move to the second scenario. If you look at this case too, yeah, for this bullish one, be expecting price to, just like the first one, be expecting price to come into this particular supply candle, supply zone, right? We will set our sell limits here and expect the price to come lower. Do you know that the probability of this working is quite high? And I will tell you why. Price will do something like this, come here, and then probably start selling. Boom. And you will eat your take profit. Do you know why this particular one is going to work? I would explain why it is going to work. Let me delete this. Then I explain. Yeah. If you look at this particular second candle, look at the first bearish candle. Price gave us a wick. Price wicked to this down area, right? Good. But do you see the second candle? There was no wick. Price did not trade back into this first candle, whereas that making this candle unmitigated. Price has not mitigated it. So if at all price comes back into this particular area in future, this particular candle in future, price is going to respect it 100%. Yes, price is going to respect it because it is not mitigated. I don't know if you get my point. And the same thing is going to happen in the bullish scenario. Let me highlight that. You would expect price to come back into that zone. You set our buy limit, right? Set our buy limit, and price is going to respect it because that particular candle is yet to be what? Is yet to be mitigated. Boom. This is likely what's going to happen, right? It is going to work for this second case. Now let us go for this third case now. This third case, do you think price is going to respect it or not? In this case, these are three candles. These are three consecutive candles, right? We have a bullish candle in between bearish candles. So we're expecting price to come back into this into the bullish candle here and sell. Do you think price is going to respect it? What do you think? Well, in case you don't know, price is going to respect it, and here's why. There is there is a bullish candle in between two bearish candles, and price is going to respect it because, let me delete this. Price is going to respect it because this is where the bullish candle closed above here, right? The bullish candle closed above here. In case you don't know, let me explain how this bullish candle works. Immediately this bearish candle closed below here. Yes, because the bearish candle is going to close below. It closed, so the next candle opened at the same price at which it's closed. So price first came down here, came back to this region, went back up, came to this particular place, and then the next candle opened, right? The next candle that opened did not break above this particular bullish one right here in the middle. So price just came down straight, right? Price came down straight and making this particular zone a valid one. I would love us to come back to this video and watch and make sure we digest, right? So we might set our sell limit and expect price to respect it. And of course, price will most likely respect it. Boom. Price will most likely respect it. So the same thing for the bearish scenario, right? The same thing for the bullish scenario rather. If you look at it, this particular candle was not violated. This particular bearish candle was not violated at all. So if we extend that out as a valid demand area and we set our buy limit there. So there's every probability price does something like this. Boom. And then respects it, making us money, right? But then let us come to the final case here. Do you think price is going to respect this particular final case? In case you don't know, price is not going to respect it. And the answer is very simple. Because this last bearish candle already violated the so-called bullish candle in between. If you look at the wick already broke through this particular candle in the middle, making it invalid, making it mitigated and already violated. So if we set our sell limit in this case now, it is going to be invalid. It is not going to work. Let me set my limit, sell limit. Excuse me, I don't know why. Okay, let me just duplicate this. Yeah, so if we set our sell limit right there, it is not going to work. It is going to violate it. And the reason is very simple. The last candle already violated. It's mitigated and violated our supposed supply, right? And the same thing is going to happen from the bullish scenario as well. If you look at it, this last candle already violated the middle one. Yeah. Please note that I am only using all this alone. I'm using this alone. I am not adding, what's it called? I'm not adding um I'm not adding liquidity. I'm not adding structure. This is just an example. This is just a schematic. Before you cannot just go to the chart and trade just this alone. If you go to chart and just look for this and you think you'll be profitable, you are deceiving yourself. So make sure you add structures to this, add liquidity to this, add supply and demand, add the order block premium and discount area, which I am still going to talk about in later videos. But then these are just the basics of everything. So yeah, let us do this. Price will do something like this. It will give us intent, and guess what? Boom, it will fail. And the reason is because the last candle already violated our supposed demand here. The last candle has already violated our supposed supply here, right? And that is it. That is it. So these are the four cases whereby you would know if your particular supply or demand area is already mitigated or not. Do you understand? So let us go into the chart and look for live examples. Yeah, so please note that the examples I'll be giving here are just to let you guys know and be able to identify how the candle looks like in a live chart, because I have not done any prior analysis to this video. Do you understand? So I have not added any market structure, I have not added liquidity, I have not added supply and demand. I am just trying to let you guys know what the candles look like in a live chart. So let's start with this particular first one right here. If you look at this particular one here, you will see it is a case one type, right? You can go back to the video, probably have a screenshot of it so you can see. This is a case one type. This is the bearish candle. It has a wick below it, but then the next candle that came also traded up into it. So if at all everything was in our favor and we draw this out and we had to like sell from there, see what happens. Price does what? Price takes us out, gives us a quick reaction, and then eventually takes us out, right? See, eventually takes us out. So if that is our initial, what's it called, bias, this would be a loss for us, right? So that is an example of the case one mitigation candle, right? So let's move to another one. Okay. I think this particular one is an example of the case 4. If you look at the candle, this particular candle right here is our supply zone, supply candle. But then the next candle that came did what? It broke into it. It violated it. If you notice, it violated it. So if at all you're trying to like sell from here, everything in your favor, order flow and all of that, and you do what? You try to sell from here, because you're unable to like recognize the type of candle that is there. You will think, oh, that is my supply zone, let me just sell. I see what happens. Price takes you out because you did not take note of the type of candle that is here. If everything happens to be in your favor, right? Good. So that is like the case for type. Case for example. Let's look for another example. Okay, look at this. This is a perfect example for case 3. This is a perfect example for case 3. See what happened here? This is our demand zone, demand candle. But see the next candle that came here, it did not violate it. The bearish candle here closed here and then opened and then went up. It did not violate it. So what happened? If this was our demand area, I will try to long from there. See, very sweet entry. Probably targets whatever eye you want to target based on how you trade. Yeah, that would have been perfect because you are able to recognize the type of candle that is in that zone, right? Good. Let's look for another one. Okay, this is also an example of, I think this is an example of case 2. Yes, this is a perfect example for case 2. Look at the bullish candle here. The next bullish candle did not trade back into this initial bullish candle. This candle right here, it did not trade back into this initial candle. So when price eventually came back into the demand candle right there, see what happened? Price gave us a sweet entry. And that would have been it. Easy and straightforward. Easy and straightforward, right? So let's try to look for another one. Let's try to look for another one. Okay, I think this is an example of this particular one right here. This is an example of what case is this? I think case 3 as well. Yeah, this is an example of case 3. Look at this is a bearish candle between two bullish candles. I see what happened. Price did not trade below this. Price did not trade below this bearish candle. And see what price did. Give us a reaction. And then boom, to the upside, right? Don't forget the fact that I said I have not added any other confluence to this. I'm just trying to let you guys know how the candle looks like on a live chart, right? So I think that is all in this. So let me try to look for another one. Yeah, so I think that's the ones I've been able to see. So that is how we are able to like identify most of these candles. So just make sure you try to add it to your confluence, and I can assure you that you're going to see a very good increase in your win rate when it comes to trading. I would find a way to like attach the picture of each cases to the video so you can probably have a screenshot of it. Like, I think I would add it to the end of the video so you can have a screenshot of it and probably always check to know if you're in a good trade, or probably like get to figure out type of candle you are trading off for. So if you know this particular video has been able to like add to your knowledge when it comes to trading, please do well to share this video, subscribe, turn on the notification button, and for those that are just coming to the channel, please do well to subscribe, and I hope to see you in the next video, and don't forget to trade the stealth way. Thank you.